Here's what y'all hoes need to know about insurance. If you buy the tea, you won't need to go to the doctor, so you won't need none. Drop down in the description box and click the link to purchase this and other fine products.
What up, Funky Bunch? This is Chris Stiff. I think you might remember me. I am the life insurance agent, and I have done a few videos with Miss Monkey Dineva. This time around, he decided to give me the keys to the car. He said, hey, go ahead and put a video together, and I'll post it. So what I'm going to do is just going to do a recap of a lot of things that we talked about from the first video and the second video, and also I'm going to give you a few nuggets that I think that would actually benefit you guys, and this is what you've all been looking for and waiting for. So let's get to it. So the first video we did was very simple. It was just about whole life and term life for the most part, and we know what whole life is. It's pretty much like owning a policy. All right, it accrues cash and so on and so forth. Term life is just for huge amounts of coverage for lower premiums. All right, and so what happens then is there's also another thing called return of premium term life. So what that means is whatever you put into the policy for whatever that term is, you get that back at the end of that term, whether it's 10, 20, 30 years. So it's true to those words, literally return of premium. They're going to return your premium at the end of the term. So if you're looking for some sort of payout, this kind of can act like some sort of savings account, if you will. And at the end, you get to do whatever you want with that. So there's also a thing called return of premium, and that's for whole life policies. And this is a different thing now. So when we're talking about return of premium for whole life policies, that means that there's a 2-year wait, all right? So it's a completely different thing, and it doesn't necessarily mean that it's bad. It's just that they want to make you wait because you might have a few conditions that they might want to hold off on before they give you the full benefit, if you know what I'm saying. So ask me about that if you have any other questions, please, because I know there's kind of a, like you said, return of premium. What's that supposed to mean? I'll be more than happy to go over the information and let you know what the difference is, okay? So then we have kids policies. All right, sorry I got in your face, but I love these kids policies. They actually mean a lot to me. So if you are a parent, it is very important. Please cover your child, because that gives them guaranteed insurability. You never know what's going to happen to their health as they get older. So start them out now. And also too, this is great because it shows them what money does. It shows them, hey, look at the cash accrual, what it does after 10 years of just paying on the policy, then keeping it, and it still accrues the cash. It shows them what money does in different ways, and I think it's a great way for you to just get them to understand that. All right, so first I told you what kids policies can do. Now I'm going to show it to you. All right, so say you have a 10-pay policy for $60,000 of coverage for your 5-year-old. All right, so 10-pay meaning what again? You only pay on it for 10 years and you get to keep the coverage no matter what. So after 5 years of having this policy in force, you have $2,316 of cash accrual in there. Great. Also, you have $25,000.48 of paid up, meaning if something happened to them at that point, that would be the benefit. The end of year 2, or year 10 rather, all right? Guaranteed cash value of $6,621, all right? So that it's still going up and up. And then also on top of that, you're done making your payments. You've got your coverage, a full coverage of $60,000. So then at year 15, still going up. And then at year 20, all right, we are then looking at $9,078 of cash accrual. On top of that, when they turn 25, they can start adding coverage of their own and kind of come into their own, and they'll kind of figure out how much coverage they need then, and it's still theirs, and they have guaranteed insurability. I think that that's pretty powerful. This is their first foray into coverage and money. So what happened after that topic? We talked about Acorns. Acorns. That is my thing. I love Acorns. It helps you save when you don't even know you are doing it. I've had many conversations with people. They told me, Chris, I'm not really good at saving money. This is a great way to go about it. We talked about how you can use it on a daily basis. Say you go to the store, you make a purchase, you go to Starbucks, you get some frou-frou, cappuccino, frappo, whatever, and it's going to cost you, say, $5.50. All right, so it's going to charge you for the product. All right, and then it's going to take the other 50 cents and round it up to the next increment, which is the next dollar, and then throw it into a money market account. This is great because you have no idea you're saving the money. The money's just going into this account. And so you go into this account 4, 5, 6 months later, you see, oh wow, I've got $1,000 saved up, because you're just using this, you're saving money as you are just living, and you have no idea you're doing it. So I know I have a link that I would like for you guys to use, because when you use that link, you get $5 placed towards your account once everything is complete. There are some people that I noticed that have not completed their registration and enrollment with Acorns. I don't want to name any names, not going to call anybody out, but you're out there, please take a look at that and make sure everything went through, because you might not be completely linked between your banks and with your credit cards and whatnot. So take a look at that. And also too, if you're not going to do it for yourself, do it for your kids. Your kids are very important, obviously. So do it for them, because you can create a kids account. I think it's called Acorns Early or something of that nature, but I know it's there for them, where you, as long as you have their social security number, you can plug it in there and you can show them, hey, look, I put this account together for you. All right, and that's another gift. So check it out, finish your enrollment. If you haven't, my link will be here in the video. Please use it. Go and start saving now. So one of the last things we talked about were annuities, and annuities is just a great way, or vehicle I should say, to put all your money into and let it drive. All right, we're going to go into the bullet points, and then whatever questions you have, please feel free to reach out to me. So let's start with this one. Guaranteed income save growth. All right, important. Legacy or wealth transfer. All right, so you can, if this money builds up so much and you happen to live beyond it, you name a beneficiary, it goes straight to your beneficiary. Long are the days of old where the money just disappears and goes into, I don't know, some 1% person's pockets. All right, so also prevents longevity and market loss risk and long-term care risk. And so this is safe money storage. All right, you can't outlive this money. All right, and it can help hedge against inflation to create a rising income as you age. Inflation, have you heard of that? I hope so, because I know I haven't. Right now it's not looking too good. I don't know what to say. So also this money passes straight to your heirs, as I said, for your beneficiaries. Okay, and this is also important for anybody who's in their 30s, 40s, maybe even 50s. Do not even think about Social Security. Social Security is going to be long gone. I'm not going to depend on it whatsoever. We need to do what we can to climb, to push, to save, to get there, so that we're not living in our 60s and 70s scraping up change and everything else like some of our parents have. So let's just hit this now, make sure that we get in front of this. All right, this is better than any CD. I don't know why anybody would have a CD. It just sits there and you have to pay taxes on it. It makes absolutely no sense to me. And there are no contribution limits. Unlike 401ks, IRAs, you set the dollar amount that you want to invest. So, and obviously the more you're investing, the longer time it sits, you're gonna see a lot more cash accrue, you're gonna see a lot more built up, all right? Lastly, about these annuities, okay, if you have a job that you left behind and you've got a 401k just sitting there, take that money and do something with it. I'll be more than happy to. I help you take that money and invest it. I have advisors, and also there's some very attractive different plans that I think a lot of people will like, and there are plans that you can't even get just going to certain annuity companies. my company will soup up your investments and make it really work for you. So if you know anybody else who has 401k sitting somewhere else, parents, grandparents, I don't know what's going on, just let them know. I'll be more than happy to help, because what's happening right now with the economy, it's not going right in such a great place. It's headed towards a dire situation. So let's tackle that before you lose all of it. So the final thing I want to touch on are IUL policies. What's that, you ask? Index Universal Life Policies. They're not advertised as much as I feel like they should be, because I feel like sometimes people just want to hold other people down. That's why I'm here. But as I have been working with Miss Funky Di on all of this, there have been people that have been coming at me with different things, and I've been writing some IUL policies. Let's talk about what those things are. Okay, so what they do is there is a flexibility to adjust premiums and face amounts. So you might, in your 20s or 30s, you're going to want a lot of coverage. But as you get older, you might not need so much. But you're going to see the big difference. What it is picture this. A Roth IRA, a term policy, and a whole life policy, and also your savings account. Say they all had a baby. That's what an IUL does, all right? And it's tied to the S&P. There's going to always be a guarantee of cash accrual and for that to climb, okay? Compound interest, ever heard of that? So what that does is it's not just interest. Interest is great, but it's interest on top of the interest that's already been there, and it's compounding. And once you have that and you're paying into this premium for years and years and years and years, that is going to grow and grow and grow. Tax free. That's the best part. So low premiums, high coverage amounts, right? So you've got, like I said, it's a mixture of all the other things into one little bag. So guys and gals, lastly, what I just want to say is that when it comes to this Index Universal Life policy, this is a great vehicle to use for generational wealth. I know a lot of people have been asking me about these things, and I'm just going to hit back at it right now and let you know that I've been hearing a lot of great things. I've been writing a lot of good policies when it comes to IULs, and I think that this is a great place for you to start. If you're anywhere in your 20s or 30s, get started now while your premiums are going to be low, 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 and you can see more and more and more as you get older, and you don't have to worry about finances and things like that as you get older, because you can just take and borrow from it, pay yourself back. It's an amazing, amazing product. I know you're probably like, Mr. Chris, where'd you come up with this IUL stuff? Why didn't you tell us about this before? Because me and Miss Funky Dineva, we were piecemealing, right? We didn't want to throw everything at you guys, because it's a lot of information. So when there's a lot of information being thrown at me, I know I just kind of say, okay, I don't know what to do with this. But we had to do it this way to kind of get the point out. And so here we are. If you have any questions about anything, please reach out to me. I'm more than happy to go over any information. I know you're going to have a lot of questions. I'm happy to answer them. So you can reach me at 305-900-4211. I'm also going to have Funky Dineva just post that phone number. Also, if you have an issue with, say, the link for Acorns, you can go ahead and text me, hey Chris, what's that link to Acorns? You can send a text to that number, 305-900-4211. I'll respond. It goes straight to me, all right? No problem. Any other questions, feel free to reach out. Type form, just go ahead and fill that out. I'll get back to you ASAP. And the best way to reach me is via phone. Go ahead and give my phone a call no matter what time, all right? It goes straight to me. I silence my phone after it gets so late, so don't worry about bothering me. I have no problem with it. I'm going to bid you adieu. Thank you very much for your time and attention. I hope this made sense to you, and I can't wait to hear from you guys. Peace.